G'day folks, it's Jim here from FX Charts. It is Monday the 18th of March. Well, the US dollar and bond yields were a little lower on Friday. Stocks rose by about 0.5 to 0.75% after some soft US industrial production and manufacturing data, suggesting that the Fed are likely to stay on hold for some considerable time yet. It doesn't look like they're going to be raising rates anytime soon. So as we can see from the trend table here that I produced this morning, there's an awful lot of blue on the heat map suggesting we're fairly range bound for the time being. Although the US data is soft, the EU data, Australian data, Chinese data are all heading in the same direction, so we've got no real directional bias here at all. And for the time being at least, I think we should be or expect a further choppy trade, albeit the US dollar does look a little bit heavy on the day. If we go here and look at this is a dollar index chart. The DXY finished at around 96.5 on Friday, pretty much in line with this yellow line here, which is the 100-day moving average. But the indicators, I was quite enthusiastic about the dollar last week, but the momentum indicators, the MACD, seem to be rolling over slightly, and we could come down here and sort of test this 96 level, I think, or even possibly these lows here, which tie in with the 200-day moving average at around 95, 85, 90, somewhere around there. So that's the dollar's looking a little bit heavy. If we go to the weekly charts of the dollar index, they're not showing us an awful lot either, possibly mildly heavy. But as I said, we have this support coming in here, this trendline support, and we've also got the 100-week move, 200-week moving average coming in at this 95.85 level as well. So I think if we do sit down there, maybe try buying dollars down there, but it does seem to me that we are headed in that direction. While I'm on this platform, I just want to go and look at the US yields, because they are looking heavy. This is a weekly chart of the US 10-year yield, and it looks to me as though we are breaking down, and we could even go and test this 38.2% level of the whole run up, which is just above 2.5%. So if that's the case, we are going to see the US dollar come under a bit of stress just on the back of lower yields. So we'll go and have a look at the currencies themselves, and here we have the Euro weekly chart, and as you can see from the pink line here, that's the 200-week moving average, which we've done a fair bit of work really since October, just either side of the 200-week. Now I think we're probably going to continue to do that. I still like the dollar higher in the long run, and I do think we're going to see a test of 110 and possibly even sort of down around here, 108, and eventually I don't discount we're going back down to 103 or 4, but that's a long way off at this stage. In the meantime, today the euro is at 113.25. It's going to run into resistance if we get up to sort of this 113.65.70 area, above which we could go back to 114.20, which is this high here. On the downside, well, I think 112.75 looks to be about it for the day. I don't actually suspect we're probably going to go down there, and it looks to be a fairly tight session. The same really applies for the rest of the currencies. There's not a lot out today. We've got this. I think until Wednesday, the Fed meet on Wednesday. The Bank of England and the Swiss National Bank meet on Thursday with interest rate decisions. You'd have to expect the Fed to be fairly dovish. Same with the Swiss National Bank. The Bank of England has got its own issues with Brexit, and I think will be highly cautious. So I wouldn't be expecting too much from them. Other data that due this week is the major data will be the UK and Australian unemployment data, and then we've got the flash manufacturing PMIs due on Friday, and they'll be quite keenly looked at as well for any further slowing of growth. So as far as that's concerned, that's the euro. I will have a quick look at the Aussie. The Aussie is fairly range bound at sort of 70, 80. It does look as though it wants to drift a little bit higher. So this is a 4-hour chart, and it does look to me as though we might see a test of 71, maybe 71.15, but I don't think we're going much higher than there today. That's and on the downside, below 70.50 looks pretty well supported. Just quickly elsewhere, the things that I'm watching at the moment. So this is the S&Ps. Now we had a bearish outside week last week, and that's been completely turned around this week, and the S&P is actually at a sort of 5-month high. I haven't been up here since October. So it's looking fairly positive. The weeklies are pointing higher. So I suspect we may, a dovish Fed, interest rates on hold. We could see stocks, US stocks, make further gains this week. The dailies are less certain, but they may be pointing a little bit higher. So probably buying dips in the stock market at the moment looks to be the way to go. The other thing I'm really quite interested in at the moment is oil. Now oil made it looks to me as though it's going to go higher. It broke above this neckline that I was talking about last week, so 58.30. It's closed just above it, pretty much on it, but it's closed above it. I suspect we may be in for a run towards 60. This level here is 59.5. We've got to get across there first. If we do get above 60, then as I said last week, this level up here around 61 3/4 where the 200-day moving average currently sits. We could be headed up there. The dailies look mildly positive. The weeklies also look mildly positive. We do, let me just blow this up. We've broken, as well as breaking above this trend line, we're slightly above the 100 week moving average, just above 58. So that, I think that's a positive sign. So buying dips with the stop loss just under 58 is the current play that I've got going at the moment. But that's about it. It's not really all that clear on Monday morning, but we'll have to wait and see how that pans out. But overall, I think look for a range bound day. That's about it for today. Have a very good one. Talk to you tomorrow. Cheers.